Hello and welcome to another update video about Solana. So here we see why waiting for a breakout is always so important because as I said, without a break above the descending trend line here, a break above this descending wedge, it can simply just extend the correction in the current wedge pattern, and I think it's doing that. So we have two possibilities here how this current correction can still be counted from an Elliott wave point of view. We can see this, one second. So it's not an ABC anymore. As I said in the last video, if it makes one more wave down, okay, no, it could still be an ABC, but then the C wave would be an ending diagonal. So it's either a WXY, as indicated on this chart now, this B wave to the downside, which should ideally still lead to a C wave to the upside. So nothing really happened. It's just that the breakout hasn't happened yet, at least. Can still happen, yeah. This C wave to the upside can still occur to $35, $36. The condition is and has been that the 2230 level needs to hold. That is my relevant support level. Of course, we have other support levels along the way, like the descending trend line here, like the horizontal support line at $24, 2330, and then 2240. We said that as long as it doesn't break below 2230, 2240, I would give it the chance to still rally in a C wave or the third wave, yeah, before then eventually still going higher, obviously. But we can make sense of it if we understand the sub-wave structure. So it's either a WXY, where we're now in the Y wave, looking at an A wave, a B wave, and a C wave. But I think the C wave would then be very short. So I'm not a fan of that wave count. So maybe we do go back to the ABC structure that I had before. And I think yesterday I posted that one more low could happen. But obviously a break would have made it quite clear that the correction was over. But so it could still be an A wave, the B wave, and the C wave down. Let me just make that white. ABC, yeah, and the C wave would have to be an ending diagonal, I think, if this is the correct count, because then we could say, right, we had a wave 1 here to the low of the 16th of July, wave 2 to the upside, 3 down, massive 4 but still valid, and the wave 5 to the downside. Now let's see what retracement level did the wave 4 trigger. Normally I don't want them to go above the golden ratio. Yeah, it didn't do that. So that's absolutely still a valid wave 4. Yeah, in a diagonal, golden ratio is fine for a wave 4. We see that quite frequently. So that is certainly a possibility here. That means we could be in the 5th wave. Now, how that aligns with Bitcoin Ethereum, if they are already in their C waves down, I don't know. It would be tough. On the flip side, there are other possibilities where Bitcoin Ethereum could make another rally, like Solana could do that as well. But anyway, I don't have a very, very good and healthy setup here. I have to say that as well, yeah. We don't have a 5-star setup here at the moment on the chart. I mean, the structure is not terribly clear. Yeah, I can count here. I mean, we don't talk about the larger count in this video. I do that often enough, but I've got here, a wave 1 up in a some kind of a messy first wave of a diagonal, a wave 2 down, here a wave 3 to the upside possibly, but with an ABC structure. I mean, obviously from a pullback point of view, we have retraced now quite a bit. So you can of course use relevant Fibonacci support levels, and you can use these structural support levels to maybe scale in an idea to trade the C wave rally. But best, let's call it reliability, we get here if we see off the C wave the first 1-2 setup. Yeah, so having 5 waves up and 3 waves down in the C wave would give us probably the best pullback trade setup. Because if you scale in now, I mean, we are quite close to support, because we can say that a sustained break below 2230 will make any further upside very questionable in this particular wave count. But we are still catching the falling knife, okay? And an A-B setup is never great. However, this is sort of the support area. I mean, we can even look at, I don't really want to add a relevant support area to the chart, but we can check the relevant fibs. So wave, I mean, I can add one. It's just relevant Fibonacci support levels, right? But I put it in orange because I don't trust this pattern, this structure. Nevertheless, yeah, we can pay attention. Do we react to these fibs? So we've got $25 and 23. And yeah, I mean, I would allow it to go briefly below 23 just because we've got the 2230 level here, which is important structural support. It was resistance before. And as long as we're holding that level, I think a C wave rally to maybe $35, $36 can happen. Below that level, it will be difficult. But as long as support is holding, we don't need to waste brain cells on other scenarios. But please note that below 2230, there is still another possible bullish scenario we can look at. Would just be a deeper pullback, and the support area that we had initially on the larger time frame would then become relevant again. $15, $12, and $10. But below $12, the probabilities for an overall bullish case are going down significantly. Below $10, I think we're going to break below the December lows. Okay, that's my update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.